Okay, so that's on the monsoon. Now shift focus back to numbers and JK Paper. A quick perspective from V. Kumaraswamy. He's the CFO of JK Paper. Joins us right now to talk about the numbers. Good having you, Mr. Kumaraswamy. Thanks for joining in. Your profits have almost doubled on a YOY basis. What's the leading contributor to this performance?
See, as you can see from the results, our volumes have gone up by about 5% or so. But when you're operating at such high levels, you have covered all your fixed costs, interest, depreciation, etc. After that, the entire contribution becomes your EBITDA margin percentages. So the incremental volumes always yield much higher EBITDA margin percentages. On top of it, we have been able to squeeze out, we affect much better cost efficiencies. You see the raw materials line, you see the power and fuel line. You will understand. So our consumption of both coal and power has been steadily declining quarter on quarter for several quarters now, and we must, I think, be the lowest consumer of power and coal in the industry as of now. Our water consumption has gone down significantly to almost less than half of what we used to be when the project at Orissa commenced. So prices were flat, but due to very good efficiencies and cost optimization exercises, we have been able to squeeze out much better profits. You must have also seen our interest costs, which have come down by about 10% quarter over last year's corresponding quarter. These were the reasons for our improved profitability.
Right. You've also seen lower raw material costs in the first quarter. So what margins can one see as sustainable for FY17?
See, we have been able to effect significant, savings in chemical costs as well. The lime which was being bought out is internally processed and recycled, where again we changed the feedstock from coal gas to furnace oil, now to pet coke. We are the first ones to go to the pet coke route. There has been very significant savings in that. Raw material, as you know, we have been able to procure it from shorter and shorter distances now. So the freight paid on these raw materials also have come down significantly. So we have been able to squeeze about 5 to 6% savings on the procurement price, without, of course, the paying anything less to the farmers, but just by optimizing freights there. And of course, the interest costs are also down. So these factors will continue in the near term, and we are also trying to see how we can up the capacity utilization percentages also. We have reached 100%, but there are still some possibilities of how to optimize by running these machines faster and running on higher grammages, which have a proportional impact in the output. So we are trying that, and we would be able to do some significant improvements in the productivity as well as the yields and buying efficiencies. So I see it going forward improving. As of now, the EBITDA margin percentage reported is about 8.9 or so. We soon hope to cross the 20% or so over a period of time. But having said that, we don't put out any specific numbers for the future, which is against our policies.
What's the contribution from exports, and what's the outlook there?
See, the exports last year was about 260 crores or something. Roughly about 10 to 11% of our total production is what we hope to export. The export markets are not the most profitable for us, but we have some obligations on export fulfillment for EPCG reasons. So taken together, maybe it's profitable. Our aim going forward will be to optimize the exports and sell more and more in the domestic markets. And we have not faced any major problems in our export markets, where we are selling these quantities, roughly about 45,000 tons over maybe about 30-35 countries, and there isn't too much of a competition in these countries for our products, because these markets are per se small, and it's not that Chinese or Indonesians are coming and dumping it there or something. For example, in Sri Lanka, we almost have more than half the markets for ourselves. In the African Rim countries, in Middle East, we sell well. We have been continuing to sell well. We sell well in Iran, and things are okay. But as you know, the focus will be to concentrate on the domestic market and slowly shrink the export markets as we go along, unless the currencies adjust significantly to accommodate better price realizations. As you know, Indonesia and Brazil have depreciated the currency so much, but we don't have any significant similar reductions in India. So that makes us a little uncompetitive, but let's see.
Right. You've been focusing on value-added paper. What new product additions would you have in that segment?
See, actually, it is not an event in that sense. It is a continuous improvement program that we, keep on doing. So I may not be able to specifically pinpoint something and say, this is the, value addition that we have, value-added product that we have been bringing or something. We continuously interact with the customers, and whatever, increased service levels he wants or tweaking in the products that he wants, we keep on doing it. So it is on an incremental basis almost every, month, quarter, etc. But if you see the, movement from one, over a year or something, it would have been significant. So I won't be able to pinpoint exactly, this is the area I'm going to improve or that's the area I'm going to improve. It's a continuous effort. But having said that, most of our products are in value-added segment now, and we'll continuously keep focusing on customer requirements to even further better it.
Okay, just before we wrap up, tell us about the capacity additions and the utilization levels as well.
See, the new plant was supposed to be 215,000 per annum capacity on pulp and 165,000 tons on paper. This year itself, we are trying to aim for 180 or so. 173, 174 seems feasible, but we want to go further than that. This, pulp mill also, we have identified some areas by very marginal investments. We can up it by about 5,000 to 7,000 tons during this quarter. So that is one aspect in terms of total capacity utilization. But even the efficiencies have been a real, eye-opener for us. We've been working at it and has been continuously, giving better and better results. In fact, for example, the power and fuel. It's just to give an example, coal we used to consume about 1.7, 1.8 tons per ton of paper. It's down to less than half now, 0.8. Water, we used to consume about 86 meter cube per ton of paper. We are down to 43. And it looks like it has further promising areas for further development. That's what's been aiding us as well as been a positive surprise for us.
Okay, we'll leave it at that. Thanks so much for joining in today and giving us that perspective. That's JK Paper. Very good numbers. The stock hasn't duly reacted though. Just before we get in Gautam Trivedi though, Kunal Bothra has been verified. Kunal, any stocks that catch your radar